Listen, folks, I know you wanted to hear about IBM. You want to know why it's dropping so much after hours. Well, they reported earnings. We're going to talk about them today. See why we got at one point a 5% drop now to a 5 or 4 and a fourth percentage drop. We'll see what happened. We're going to peek these earnings. If you look at historical stock performance, hasn't been favorable for IBM. You look in the last 5 years, this is a stock in the past 5 years that's down 5% in the time of all-time stock market highs. Down 5. It does have a great starting yield over 4.5%. Got to take that into consideration. And in the last year, technically is up 23%. But if you compare it to several points in 2019, it's really level at best. So keep that into consideration. Let's look at these earnings, see what's going on. So, non-GAAP EPS line of $2.52 beats by a cent, and a GAAP EPS line of $1.25 misses by 65 whole cents. That's rough. That's a bad miss on profitability. Revenue coming in at 17.62, up 3.3% year over year. Not good because they missed by 190 million. Yikes! This is an overall bad quarter. Just off the numbers, we'll dig deep into the press release here, but just off the initial numbers, it looks pretty bad. So let's get into the press release here, see what we have to see. As far as revenue segments, cloud and cognitive software up 3%. That is a big shocker for me. One thing I expected to be a lot higher in terms of percentage gain because it's been showing a lot stronger gain this year. Global business services up 12%, not too bad. And net cash from operating activities $16.1 billion. Adjusted free cash flow at 11.1, up 0.3% billion over last year. Not bad in the adjusted aspect. But again, look at this. The total cloud revenue over the last 12 months up 14%. And cloud and cognitive software cloud revenue up 31%. So to see that only up 3% this quarter is kind of a shocker. I expected it to be, it's a carrying segment for them right now. That is a big part of their business. And to see it kind of struggling that way, not exciting. Debt was reduced $7 billion since the end of 2020. We'll look at the balance sheet, make sure we can verify the proof here. GAAP, we love GAAP numbers here. GAAP net income at $1.1 billion, down 33% year over year. Lost a third of the net income here. Definitely concerning. Not something you like to see. We're talking about a company that was making $1.6 billion down to $1.1. So not exciting at all. Nothing else as far as highlights here really stand out. If we're being clear here, we talked about those highlights for sure. So year-to-date results here. Revenues for the 9-month period totaled $54.1 billion, which is an increase of 1.6% year over year. Pretty darn small. Yeah. That compares to 53.3 of the year prior. So net income at 3.4, which is down 19% year over year. Yeah, you don't like it. Which is reflecting a $0.7 billion impact of transaction costs close with the Kyndryl separation. So that's part of the reason why you see that. But still, I would like to see them have managed a different avenue there to potentially avoid that big hit in terms of net income. Maybe that's just me. Yeah, that's okay. I don't believe they reflected any guidance here, so keep that in mind. No guidance. So we don't have guidance, so we don't know what it is. So again, it could have been positive, but we don't know. Obviously, the stock's down, so if they would have given good guidance, it would have been nice. But they didn't give guidance. It's fine. Total current assets here. They are giving an end of 2020 comparison, which is perfect because that's what they're talking about. 9 months comparison here. $29.9 billion compared to $39 billion in the previous 9 months. Definitely a decline there in the cash position mostly. Would like to see that improve a little bit for sure, but that's okay. And assets in general, though, 144 compared to 155.9. big decline there, right around 11 billion, or just around 12 billion, I should say. So not exciting on that aspect in terms of asset decline. Don't want to see it. Now, liabilities, we want to take a peek at that. It's important. 35.8 compared to 39.8. Definitely a decline there. And I am pretty excited to say that total liabilities did fall quite a bit. 121 compared to 135 billion. So technically, they rose the equity on this one. Shareholder equity coming in at 22.2 compared to 20.5 billion. And with a company that pays as large of a dividend as this, I'm not too upset about it. As long as they continue to pay that dividend, they have the cash to continue to pay that dividend. They're making the net income to continue to pay the dividend. So I'm not concerned about that at all. I mean, I own the stock mostly for dividend purposes, and I've purchased in earlier this year at around the $120 mark. So we're up on the position, and we're earning dividends, pretty nice dividends too. So I'm fine with it. The stock's trading, I mean, in my opinion, relatively cheap. We're talking about a company revenuing last year at nearly 78 billion, trading at a market cap of only 127 billion. This year, likely showing a revenue right around 80 billion, trading at a market cap really just 1.5 times that amount is pretty darn cheap, and a PE ratio of 23.9, right around 24, is pretty cheap compared to the general market. Now, again, this is a stock that it's trading at the valuation for a reason. It's because of the fact that it's not growing revenue by significant margins and barely growing it at all. So that's why it's trading at a much lower multiple than a lot of the companies on the market right now. But with that yield being so high, I still like IBM as a safe play here to be kind of especially with the after hours dip. I like it as a safe play for the future, honestly. I think it's plenty fine. This dividend is healthy. It's honestly healthy with this company, and they're doing great things, and they're committed to paying the dividend out. So as a dividend play, I like it a lot. Share appreciation of shares, not sure what that looks like in the future. They'd have to turn the business around to be a lot more cloud focused. We'll see what it looks like. But that's what I got for you, and I hope you have a great day.